I hope you can hear me well. I mean, we are facing two challenges here. Well, we speak after Jean-Paul, my good friend Jean-Paul, and he said it all. So what could we add as a challenge? And then I must say it's lunchtime, so I see people leaving. But I think we have to add a few things, and I'm happy to talk about this summit that was held yesterday under closed door. This is the sea of the race, you know, collaboration, and regulators are used to talk, work, exchange together, and it's what we have been doing yesterday, during 3 hours, with regulators from the US, from the EU, from the MENA region, also Asia, and I think it was really productive. So today we're going to come back to you with some public main takeaway. What would you talk about? No, basically, we had two issues to address, well, to talk about is obviously greenwashing. That's the first hot issue. And then transition planning, what to do about the transition. But we want to be a bit more specific. So I'm glad to have four panelists with expertise. And I think that we'll start with you, Jonathan. I think on the greenwashing issue, we keep saying that disclosure is the tool. To what extent could we say that this is the right tool? To what extent it may help mitigating or even fighting greenwashing? I think it would be good to hear from you.
Yep,
with
sure.
your IFRS and global perspective.
Thank you very much, Philippe. And again, thank you for the organizers for allowing me to share the IFRS Foundation perspectives. And I think Jean-Paul has already advanced a lot. You know, disclosures, it's really the backbone of financial markets. It's actually what allows to connect those that are willing to raise capital with those that are willing to invest, but they want to have a proper understanding of the risks and be able to price them appropriately. And I think Jean-Paul was referring to what are the risks of misleading information, greenwashing, that can actually hinder investor trust and can limit the ability of markets to produce financial flows. And I think he was talking about risks to integrity, investor protection, but I would go beyond, because actually if there are concentration of those risks, say in financial institutions, there could be systemic risks or financial stability risks as well. So disclosures enables, disclosures in a way that's regulated, verified information, information that is material, allows investors to have trust and confidence in those disclosures. But this requires a regime where disclosures do address their information needs. And that is what the IFRS Foundation, through the International Sustainability Standards Board, is trying to do. We have designed our standards to provide that information that's material to investors. Our standards have been designed, and this is why we have been working very closely with Jean-Paul and IOSCO members, to be incorporated into regulatory frameworks. These standards very much are put at the same level of accounting standards. So it's the entire process through the financial reporting chain, CSOs coming closer to CFOs, boards discussing risk management strategies, audit committees looking into that, and of course, assurance, verification, and supervision coming on top of that. And I think it's really key in interconnected markets that information is comparable and consistent at global level. We have been already seeing a lot of sustainability information coming through the markets, but that has been through, I think Jean-Paul was referring to the alphabet soup, that myriad of different standards, many of which have been applied on a voluntary basis without appropriate supervision, and they were designed to meet the needs of different stakeholders, perhaps not just investors. What we're trying to do is deliver that material information for investors, that can be embedded into regulatory frameworks. We have been working very closely with the international assurance and audit standard setters to ensure that our standards were assurable. This is why IOSCO has also been looking into our standards. They have determined they are suitable for use in capital markets to deliver that degree of consistency and try to get rid of greenwashing, misleading information. So it's not just about presenting how green the company is, but it's actually about talking about risks and opportunities. This is not just for regulatory purpose. It's also to enable investors to have access to that information.
Yes.
So that's the design really of our standards.
Yeah. No, that's very clear. I mean, so we have the ISSB work coming with standards on one hand, and on the other hand, we have the assurance, the quality of the audit. That's key. Obviously, as a CFO, I would add the question, I'm a cross-border firm. What about the consistency between all these standards? Because you have the ISSB, well, okay, but what about the US? What about the EU? This is what we call the is it convergent or is it at least interoperable? So how do you address that?
Right. Now that our standards are out, we're working towards bringing on board regulators to adopt our standards. This is why IOSCO is calling on its members to look into ways, but we're also cognizant that different jurisdictions have different frameworks in place. And of course, if we take, for instance, Europe, their standards have been designed with a broader sort of scope. They are addressing needs that go beyond investors. So our work there has been to ensure those standards are close together so that the informational needs are addressed appropriately. So we have been putting side by side our respective standards, and I can claim we have achieved a very material degree of alignment. And I think the end goal is to mitigate the reporting burden on companies and allow investors as well to have the same degree of reliable information. So what we're doing, we've been spending a lot of time in Brussels. We've had our European colleagues coming to our different offices. We're trying to work out guidance to provide to preparers, to investors as to how our standards work together. We should say that ultimately it is important to achieve that degree of convergence, alignment, in order to deliver the comparability that is needed. It is allowing investors to compare not just across companies, but also across industries and across jurisdictions. And that's actually absolutely fundamental to have that degree of global convergence. It's going to take some time. We acknowledge different jurisdictions are at different stages, different starting points. Some have experience with sustainability reporting. This is why we're trying to help them through providing support for adoption to get at pace with that. So it's not about race, the title of the conference. It's about suitability and appropriateness, but let's don't lose sight of the end goal, which is achieving that degree of consistency and comparability.
Yes, well, that's very helpful. It means that the different parts of the world are talking to each other. You work together, and there is some kind of conversion, even if it's not identical. There is convergence and consistency, right. And it's at least interoperable. That's key in terms of cost and in terms of information to investors. This is key. So that's one very important point. So let me jump to the other side of the panelists, because we have this global regulatory view in terms of disclosure. I'd like to come to you, Shane. You have the Asian perspective, which is also very interesting because you've been working a lot on transition planning. The ASEAN group of countries have done a lot on taxonomy. We are even following your taxonomy somehow. So maybe you could tell us what about you're doing on transition planning, what it means, and also what is the link with taxonomy.
Thank you. Let me first start off by sharing with you that in Southeast Asia, which is a group of 10 nations, what we're trying to do is actually build a sustainable finance ecosystem. And that ecosystem in our minds has three pillars, which need to operate alongside each other. The first is actually to have a common language. That's the taxonomy that you were talking about, Philip. The second is actually to have a transition frame, because I'll explain later, transitions are really difficult to do. And the third is actually what Jonathan was talking about, which is disclosures. Now, we need all these three pillars to work together. So what is a transition? And I've been asked this question many times. The best way for me to describe a transition is actually the marriage between ambition and reality. Because we're all at different starting points and we want to reach a common point. But the journeys that we will take to reach that common point will actually be different, as Jonathan was saying, because the starting points are different, countries are at very different stages of development, economically, socially, and have different access to resources. So for us, it's extremely important that we are able to take this transition journey, minimizing any social or economic dislocation. So we hear a lot about just transitions, affordable transitions, and I think that is key because we have to come back to the principle of common but differentiated responsibilities. So a transition really is to get us from where we are today to where our ambition is, and that's the Paris Agreement target. And what is different from the way we're allocating capital today? Transitions are actually forward-looking. So the challenge for us is how do we know that we are looking ahead in time and yet that journey is going to be achieved? Because if you made a green investment today, it's easy. It's at a point in time, but transitions are difficult in that respect. So for us, of course, what is important is to have a common ambition. And I think any transition planning, because transitions are so difficult, they require structural changes, they require changes in the way you operate. And this has to be planned. You don't decarbonize overnight. So for us, it's really important that we have the right climate ambition. I think that's the first element to transition planning. The second is we have to be confident of the robustness of the ability to deliver. And what does that mean? It means that you have to have an action plan that really works. It means that you have to have the capital, because you can have all the plans you want, but if the capital is not flowing, that's absolutely useless. The third is there are a lot of good risks along the way, so risk management, risk mitigation. Governance is extremely important because you have to go to your stakeholders and say, this is our journey, this is how we're going to do it. And of course, the last bit is disclosures and reporting, because you need to be monitored, you need to know where you are. So these are the key elements for transition. It sounds a lot easier than it really is, and because every country is going to have its own pathway, right? So you have this issue about do you use a global pathway? IEA has one. Do you have a regional pathway? In Southeast Asia, we have the SDS scenario put out by IEA. Do you use a country pathway? Japan has a country pathway. Or do you use a sectoral pathway? IATA has a sectoral pathway. So there are many ways to do this, and I think there are many options available, but it comes down to the firm. At the very basic level, you actually need to be able to get the firms to move. And what's happening right now is that we have a lot of frameworks and guidances, but they don't provide the regional and firm specificity or even country specificity that Jonathan was talking about. So in Southeast Asia, the 10 regulators came together and they issued the ASEAN Transition Finance Guidance to provide that specificity. What does it have to do with the taxonomy? So the taxonomy is actually a point-in-time assessment. And the work we have on the ASEAN Transition Finance Guidance builds on the ASEAN taxonomy, which I have to mention is a transition taxonomy because it doesn't have a single threshold for economic activities. It actually has up to 3, so that you can slowly build your efforts into the most ambitious tier. But essentially, the ASEAN Transition Finance Guidance builds on the ASEAN taxonomy to allow companies to create forward-looking pathways for them to be able to transform their operations and their technology along the tiers of the ASEAN taxonomy at a speed consistent with a science-based pathway. I'll just stop there. Thank you.
Thank you very much, Eugene. So now we see that there is the transition planning, the taxonomy, and the disclosure. There are 3 dimensions which goes together, which support each other. So let's come back to the UAE, and I'd like to ask Kay. You work for the as an advisor to the ADX chairman, and we've seen ADX growing so fast and over the past 2 years. And I was wondering, are you facing this kind of greenwashing issue, and what do you expect from the listed firms, and how do you address that?
Thanks, Philippe. I think ADX had a tremendous couple of years, and the headlines have been very much focused on the equities side. But first, let's focus on the debt side, because that's really been at the forefront of the raising of green and sustainable capital. Abu Dhabi issuers have raised over $8 billion of green and sustainable bond and sukuk capital over the last couple of years. This year alone, we saw the first dirham green sukuk issued by FAB. We had Mazda's highly anticipated first bond, which was of course green, and we've also seen issuances by Alda, Adib, Taka, ADCB, and Mubadala, many for which has been the first green or sustainable issuance under their programs, which has been highly exciting. Now, when we look at the debt market and the bond and sukuk market, it is highly institutional. Documentation is done under ICMA. There's clear use of proceeds and disclosure requirements. And as a result, you've really seen that be at the forefront for raising capital and showing what can be done. And because it's institutional, yet the application of the rigorous analysis, the processes of approving those investments is also pretty well developed. So now if we turn to the equity side, and again, ADX had a tremendous couple of years, and this year for the first 9 months, ADX was the third largest home for raising IPO capital proceeds after China and the US. And you just think of the size difference in jurisdictions, which I think really hits that point home. In the first half, we had the largest global IPO in ADNOC Gas. And we're very proud to say that 100% of our PJSCs listed companies have issued standalone sustainability reports, and we've seen a great evolution over the last couple of years in the level of data that's been provided under that. We also launched our ESG Select Index earlier this week with our partner FTSE Russell, which again helps provide a framework and understanding of our most ESG focused issuers, if you will. And I think when you look at the global equity markets more broadly, I think it's still very much on a journey, and we've seen the World Federation of Exchanges really pick up the baton for this with the release of their green equity principles and now the development of green equity accreditation. And I think this is particularly important and relevant because equity is more of a retail market, and so this will enable investors to really be able to ascertain which investments are green. And again, when you think about the new generation of investors who want their investments to be much more aligned to their values and sustainability being at the core of that, I think this is very important development. And so I think, again, to echo the points made earlier, it's really about developing those global standards that are consistent, have interoperability, and where there is the veracity of data and the processes behind them to provide conviction and substance behind them. And I think we're still very much on a journey towards that.
Thank you very much. Well, we have the very good example of ADX with the index you are developing, which, green index somehow, which is really interesting. I'd like to move to Emmanuel, who is the CEO of FSRA, maybe to tell us what, as FSRA, we are doing in order to support the net zero transition, and maybe how we can set up this sustainable hub in the region.
I think I discussed that in my opening remarks earlier today about what we've been doing, and we've been doing a lot, as you mentioned, from regulatory carbon markets, creating a framework for that, and green funds, and importantly climate transition funds and green bonds and sukuks. But I want to just go back to the main theme of today, which for this panel, in terms of the Global Financial Regulators Summit yesterday. I think some of the key takeaways from that were that from a regulator's perspective, and this was a great collaboration event because we had regulators not only from our GCC region in the UAE, but we also had regulators from North America, Europe, Britain, Asia, etc., all discussing the same theme of sustainable finance and how regulators play their part. And I think the first essential element of that is that regulators, as Jean-Paul had mentioned earlier, are acutely aware of the need for more regulation and more standards in this area. So that's number one. And regulators, I can assure you, across the globe are working very hard to create not only the standards, but the regulatory frameworks to help facilitate industry and private capital to get where it needs to go. And that's the 95% shortfall in green transition financing. I think another key area, and there's a consensus on this, is that though most securities regulators have already built into their frameworks the concept of clear, fair, not misleading disclosure, which can capture greenwashing, there needs to be more than just that reliance on that current framework. And regulators, again, are working on developing greater guidance. The FCA only released this week a whole suite of guidance in relation to this area. And thirdly, and very importantly, and I mentioned this earlier today when I spoke about transition, that 95% of required capital is not going to go into green, which is only 5%. It's going into greening. So building regulatory frameworks that will facilitate capital to go into greening assets is essential. And I think transition planning is a great challenge. And Eugene, you've outlined some of those challenges already. And as regulators, we're cognizant of the fact that transition planning needs to be accountable. You need to be able to verify that these transition plans are actually taking place. How do you do that? That's where different standards and rules and regulations have to come in. So there's some of the takeaways I took from yesterday. I think it was a great success, and I'm looking forward to next year's Global Regulatory Summit here at Abu Dhabi Finance Week.
Thank you very much. I would add, if I may, that we, as FSRA, we also, you mentioned that, by the way, we coordinate the Sustainable Finance Working Group, which is the UAE grouping of all regulators. It's a good example of collaboration, as we have in Asia, as we had yesterday. So thank you so much. I think it's time for lunch. And then I want to thank the panelists. I think we can applaud them, and thank you.